Hi, this is Brian Neal with TradeToBeFree.com, and I want to give you a market review here, market analysis, what's going on. And last time we talked about the fact that we had this bullish signal here in early September, and it was a little soon after the bearish signal. We had that bearish signal in the end of July that we had in the alert service, and we saw a 5% plus drop soon after, and then we had a bullish signal here in early September, and usually you want to see at least 6 weeks between the bearish and the bullish signal. Ideally, what you want to see is a strong rebound soon after the bearish signal to take out new highs, or you want to give it more time to pull back, consolidate, and start a new uptrend. And this was a little bit too soon, as we pointed out at the time, and it was less likely to lead to a sustained uptrend. And early last week on Tuesday, we had a bearish market signal again. And what you often see after a bearish market signal is you often see a rebound. If you're short-term oversold, you'll get a rebound very often. And what happens in that rebound is very key, okay? If you're bullish, we want to see a very strong rebound that continues for a few days and makes a run towards the highs. So if we close, let's say above, let's say 8150 up here, okay, and make a run toward the highs very quickly, that's good. In this case, we got a strong start here off the 200-day moving average, but the past 2 days we found resistance up here at the 20 EMA and 9 EMA, and now we're coming back, and we may continue to see that with some news ready to hit the airwaves in the days ahead with trade and with earnings season starting, and with some declining economic numbers that we've seen over the past few weeks. We saw the ISM Services Index that was much below expectations. We saw Producer Price Index much below expectations today. That signals a slowdown in the economy. And of course, the Manufacturing PMI Index was a lot lower, in fact, lower than it's been in 10 years in this most recent reading. And of course, we have the Fed. We have the Fed this afternoon. We've got rate cut or not coming up here later this month. So all this news is going to hit the market here in the next couple weeks or so, and that could push the stock market lower or higher. And right now it looks like it wants to go lower, and those are the technical signs right now. But again, we're seeing very mixed signals from the market. We saw the bearish signal here and only about a 5% pullback. And a lot of times when you see that bearish signal, you only get a pullback or a small correction. You don't always see a large correction or a long-term bear market. It's very often not the case. Okay, so it just means a large pullback or correction is more likely at that point once you see that signal, and that's what we're seeing right now too. So we got to be on our toes and be careful here. Another reason we need to be that way right now and be careful is because we're seeing a lot of false breakouts and a lot of stocks that are reaching good technical entry points, whether it's a breakout or whether it's a double bottom pattern or some other bullish pattern. We're seeing those stocks reach those entry points and then pull back soon after. And this is a good example of that. Here's a stock that broke out recently. It appeared in our weekly alert newsletter. It's an insurance company. It's got rising estimates, good growth, and didn't quite reach our technical entry point. The entry point listed in the alert service was a little higher than this, so it never got there. But it did reach new highs, okay? And you can see how it came back shortly thereafter to test this 50-day moving average and 50 EMA. And that's what we're seeing a lot right now. We're seeing a lot of stocks reach good technical entry point and then pull back, okay? And that, along with the bearish signals in the overall market right now, forces us to really look at only the best trading opportunities on the long side if we're going long. And what we're looking for right now is not only a very good swing trading pattern, we're also looking for a new catalyst, something fresh that can push the stock price higher. So something significant that should lead to a higher price for the stock and increase the value of the stock. Okay, so not only the best entry point, but also something that's hitting the market right now that should push the stock price higher. And usually that's something for the company itself. And we talk a lot about that on the site in the free primer. So if you tried our service or if you subscribe to our service right now, you'll see links between each stock that we feature in the alert service. And those links will give you a very good primer, a free primer of our strategy to get in and out of the stocks. And one of the things we talk about in the free primer is to increase your win rate, is to look for something that's hitting a good entry point with a fresh catalyst. And I'm going to show you an example of the difference between the two right here. This is another stock. It didn't appear in our alert service, but it's a top growth stock that's appeared before, I believe. And it had a double bottom pattern here. So we've got this really strong long-term uptrend, and we've got this double bottom pattern. And then we have a catalyst that came out, I think it was Wednesday night or early Thursday. I think it was Wednesday night that it came out. Stock gapped higher. It hit the entry point with the catalyst and took off. Okay, now it's forming flag. It's really stretched right now, so it would be very bullish for the stock for it to actually clear this high here and move higher from there. That would show a lot of strength. So right now it's probably not likely to do that. Okay, but you can see the difference between hitting this entry point, which is in the double bottom pattern here, is a break of the prior high. We have some videos on the YouTube channel and the blog that go over the double bottom pattern in more detail. We talk about how we look for these within a strong long-term uptrend. A lot of top traders will actually look for that consolidation pattern, or as a consolidation pattern, versus a long-term reversal pattern. Okay. And when you have these top growth stocks that make these strong runs here and then form a good consolidation, narrow consolidation, and then break out with a strong catalyst, that's a really good combination. And right now, that's what we're looking for. We're looking for just those stocks that have the great consolidation pattern, the great long-term trend, and are reaching the entry point with a catalyst, with a fresh catalyst right now. Okay, ahead of earnings. A lot of these stocks, they might, break out, maybe go up a little bit ahead of earnings, but you'll oftentimes see them turn over and start pulling back ahead of earnings because no one knows for sure what's going to happen in their earnings release. And right now we have a lot of companies that are reducing their earnings expectations, or analysts are anyways. Okay, and they may exceed those expectations, and they may under-promise, over-deliver, or they may not. Okay, and the stocks that miss expectations over the past couple quarters have been hit really hard. So we definitely want to avoid jumping in ahead of the earnings release unless the market becomes really strong again and we see one stock after another in the industry that the stock is in start to break out and soar into and after earnings. Okay. So, but that's a good sign for Q3 earnings when you have these stocks with the good earnings news hit a good entry point and surge like this. Now, this wasn't earnings. This was a different type of news that was released for the stock, okay? But that's a good sign heading into Q3 earnings season. And I think what's going to happen is that a lot of stocks that do beat estimates and raise their guidance are going to be very favored by fund managers right now in this kind of environment with the economic growth slowing down, with a 10-year yield lower, and inflation lower for longer. Fund managers are going to look for stocks that are still growing, still pushing up those earnings estimates, and still running on all 4 cylinders or all 8 cylinders, and still going strong despite the slowdown and despite other headwinds that are in the market right now. Okay, and of course, if they miss estimates, it could be a real disaster. So, we're waiting for after earnings, and we're waiting for the catalyst to drive the stock through a good technical entry point. We want the earnings on the news very positive, and we want the strong consolidation pattern within a long-term uptrend, and all those factors be in place before taking a trade. I think if we do have all those factors in place, like we're seeing now the past couple of weeks, we saw SNX on earnings, a real good earnings report, hit an entry point in the earnings eruption strategy, make a very clean breakout, and take off. Okay, so some of the signs before Q3 earnings are very strong, and so we want to get ready to use that strategy and look for these companies that truly have good earnings news and good outlooks in Q3, because I think a lot of these might make a big move, okay, after a long consolidation for the market. And there's some bulls out there that are still anticipating that earnings growth will reaccelerate next year. So we've had this sort of earnings plateau and for small caps an earnings recession. But now that we've sort of been through that period, earnings growth will reaccelerate next year. and growth will moderate around 2% GDP growth, and everything will be hunky-dory. That's, the bullish thesis right now. And, there's a big debate right now whether that's going to happen or whether we're going to slow down further and go into recession. So, that's the bullish and bearish side of the fence right now. And again, I still think that, if a company can still perform well this past quarter, manage their costs with margins being compressed, and that can raise their outlook, that will really stand out versus other companies that are going to report this quarter. So we could see some really big moves out of good consolidation patterns and in the earnings eruptions strategy, and we have to be ready for that. And it's a great time to get prepared because it could be a really good earnings season if things go well enough. All right, that's about it, guys. Be sure to click the subscribe button down below to get notified of the latest video when it's released. And as always, you can go to our site and check out our blog. It's updated about once a week, and we've got a lot of great articles out on there to help you prepare for a Q3 earnings season as well.